Hey everyone, welcome back to The Explainer. So today we're taking a super fascinating and honestly pretty hilarious look at the ultimate financial equalizer, Wall Street. It's this incredibly unique ecosystem where literally the absolute brightest minds and the absolute dumbest minds somehow rejoice in the exact same arena. We're going to take a highly structured zoo tour, if you will, of the 6 distinct investor archetypes roaming this chaotic landscape. By breaking these folks down, you're going to see exactly who's moving the markets, or, well, who kind of thinks they're moving the markets.
Okay, let's dive into this. I want you to keep this one fundamental rule in mind for this entire explainer. Nobody knows what the hell is going on. I'm completely serious. Because no matter how much math, how much confidence, or how much absolute delusion these different types of investors bring to the table, this right here is the one sacred truth that unites every single person in the market. It's the ultimate equalizer.
To really wrap your head around this ecosystem, you kind of have to appreciate the sheer extremes of the spectrum here. On Wall Street, you've got a guy with a literal PhD in quantum physics operating in the exact same market as a guy who, quite frankly, eats crayons. They are both trying to beat the exact same system. So to figure out how they actually do it, we're going to categorize these market participants into 3 main groups, starting with the bunch that takes themselves the absolute most seriously.
Section 1, the traditionalists, value investors, and chartists. So we're basically comparing extreme, agonizing boredom right alongside manic, artistic energy. Let's get into it. First up, we've got the true Warren Buffett disciple, the value investor. Now, this is a very specific type of guy. His wardrobe? Exclusively khakis, multiple shades of beige. He sips lukewarm coffee while spending, I kid you not, upwards of 400 hours meticulously analyzing a single company's 10K report. He absolutely will not shut up about economic modes, compound growth, and intrinsic value. Honestly, he probably considers Benjamin Graham's The Intelligent Investor to be light erotica. If you're looking for excitement, yeah, you're not going to find it here. The value investor is basically the human equivalent of watching paint dry. And ladies, if you want a man who won't try any position besides missionary, this is absolutely your guy.
But what's really interesting here is the hilarious reality check hiding behind all that deep, fundamental analysis. If you ask a value investor for his year-to-date return, he's going to immediately deflect and proudly declare, "Well, I invest for the long term." Let's define what that actually means, shall we? Long-term is really just a polite translation for the fact that he's been completely underperforming the broader market since the Bush administration.
Then, on the complete opposite end of the traditionalist spectrum, we have the chartist. This guy is operating with like 12 monitors glowing with neon lines. He looks at a basic stock chart the exact same way a conspiracy theorist stares at grainy UFO footage. He's literally seeing bull flags forming in his morning coffee. To the chartist, every single candlestick tells a story. And those fundamentals the value investor is so obsessed with, the chartist ignores them entirely. He doesn't even know what the companies do. He actually calls fundamentals boomers. He doesn't admire Warren Buffett, he admires Pablo Picasso. Because in his mind, he isn't doing due diligence, he's making art. And you never, ever interrupt an artist at work.
So just to quickly summarize our traditionalists, we've got a total clash of ideologies going on. You have this agonizing 400-hour hunt for intrinsic value matched right up against the frantic 12-monitor search for bull flags. 2 completely different methods, both trying to crack the exact same, completely unknowable market.
All right, let's leave the traditionalists behind and pivot aggressively to our next section, the modern hustlers, entrepreneurs and Web3 bros. This is the hyper-energetic, utterly delusion-fueled modern grind-set side of the market. These guys aren't looking at 10Ks or drawing triangles, they are riding pure, unadulterated hype. First up in this group, the extremely loud, self-proclaimed entrepreneur. His idea of a highly diversified portfolio consists of exactly 3 meme stocks, a sketchy Forex trading course, and a pending DUI. He starts every single morning with a freezing cold plunge, a David Goggins podcast just screaming in his ears, and a period he likes to call meditation, which, let's be real, is just him thumping his chest wishing he was a Wall Street broker in the 1990s. Walk into his bedroom and you'll find a Hustle Harder poster, 3 empty Red Bull cans, and, well, some suspicious white powder on his nightstand. You really, really hope you don't run into this guy at the grocery store. Because if you do run into him, and you make the mistake of actually asking about his investing strategy, he's going to look you dead in the eye, without blinking, and say, "Bro, the best investment is in yourself."
He absolutely loves talking about his diversified income streams. But the reality? Those streams consist entirely of sports betting, crypto meme coins, and aggressively charging people a $20 cover to get into his own house parties. Let's be very clear here. This guy isn't trying to beat the market. He's just trying to beat his charges.
$13,000. That number perfectly introduces the entrepreneur's spiritual cousin, the Web3 bro. Because 13 grand is the exact amount of money he so proudly turned his initial $400 investment into. But the story doesn't end there, does it? Because he then aggressively rode that entire $13,000 all the way back down to absolute zero. Let's break down the Web3 bro's current situation. He famously lost his entire net worth in a rug pull for a crypto token literally called Fartcoin. But hey, don't worry, he likes to reframe that total financial ruin as a learning experience. Today, his assets consist of 12 NFTs of pixelated animals. He lives off-grid in a van, swearing up and down that fiat currency is a total scam, all while ironically still relying on his mom's Venmo account to survive. He hasn't filed taxes since 2021, but in his mind, that doesn't matter because, the blockchain is borderless, man. He spends 8 hours a day in Twitter Spaces aggressively arguing about the future of finance with literal 14-year-olds. And the ultimate punchline here? He has absolutely zero idea what the blockchain or Web3 actually is. He just loves stringing together fancy buzzwords, so nobody understands him and he sounds like he's early to the future. All right, moving on to our final and frankly most volatile section, the chaos agents, meme traders and perma-bears. Here we're juxtaposing two absolute extremes of market psychology. We've got hyper-optimistic delusion going head-to-head with apocalyptic, end-of-the-world pessimism. Let's meet them. First, representing pure, unbridled optimism, we have the meme trader. This guy's daily diet? Strictly Monster energy drinks and Hot Pockets. I'm pretty sure he hasn't actually seen natural daylight since GameStop peaked back in 2021. He worships a guy named Roaring Kitty and considers Warren Buffett to be an absolute coward. He doesn't do technical analysis. He's certainly never read a corporate earnings report in his life. He just feels things, right? And to him, that feeling is more than enough due diligence. His brilliant master plan for generational wealth is going completely all in on weekly SPY options calls. And a Roth IRA? Yeah, he's literally never even heard of it.
And this brilliantly illustrates the mental gymnastics of the meme trader, which are honestly a sight to behold. When his stocks crash, a massive 40% pullback isn't a loss to him, it's just consolidation. When those weekly options expire completely worthless, he simply blames massive systemic market manipulation. He doesn't take losses, guys. He earns battle scars. He completely refuses to accept reality, substituting it entirely with just pure diamond-handed delusion.
And then we have his polar opposite, the dark cloud of Wall Street himself, the perma-bear. This is a guy who literally never blinks and lives his entire life inside an Excel spreadsheet. He firmly believes that every single asset class in existence is a massive bubble, even the non-tradable ones. Ever since he watched the movie The Big Short, which, by the way, wasn't just a movie to him, it was a profound spiritual awakening, he hasn't known a single moment of peace. Now he just paces around his apartment in his socks all day, mumbling to himself about synthetic CDOs and the imminent collapse of Western finance. He sits at home completely surrounded by emergency water jugs, giant stashes of canned beans, and, for some reason, Q1 earnings reports from the year 2012.
137. That is exactly how many times the perma-bear has been wrong in a row. But his answer to that staggering failure rate? It's always exactly the same. One day. One day the market will crash, the Fed will be exposed, and everyone will finally see. He is short the market, he's short the economy, and most of all, he is short on hope. He doesn't even really want money at this point, He just wants to watch the entire financial world burn to the ground, strictly so he can stand in the smoldering ashes and whisper, "I told you so."
So, summarizing our chaos agents, we've got the ultimate showdown of extremes. On one side, the blind, euphoric, degenerate gambling of weekly spy calls from the meme trader. On the other side, the dark, apocalyptic obsession with synthetic CDOs from the perma-bear. Two completely broken psychologies just locked in this bizarre dance around the exact same stock tickers. Section 4. The Universal Truth. Let's move to this and see how this builds, because we've toured the entire zoo now. We've seen the beige cockies, the 12 monitors, the pending DUIs, and the giant stashes of canned beans. So, what is the ultimate universal truth tying all of this together? Well, what have we actually learned today? Absolutely nothing. Literally zero. And honestly, that is the brilliance of studying this ecosystem. We've broken down all these incredibly distinct, wildly confident personas and realized that not a single one of them actually holds the magical key to the market. Despite everything we just went through, none of this has given us any practical advantage whatsoever.
Because ultimately, it truly doesn't matter which extreme you fall into. Whether you're treating Warren Buffett's annual shareholder letters like literal religious scripture, or you're complete degenerate betting your actual rent money on a candlestick formation you just invented called the inverted frog pattern, it all boils down to the exact same conclusion we started with.
Which brings us to a final question I want to leave you with today. We know the sacred truth. Nobody knows what the hell is going on. So if everyone from the quantum physicist to the guy drawing lines in his coffee is basically just guessing in the dark, what is your strategy? Where exactly do you fit into this incredibly bizarre zoo? I want you to think about that the next time you open your portfolio. Thank you so much for joining me on this explainer today. Keep your charts clean and your coffee hot, and I will see you in the next one.